Thank you. Yes, just down the road. I'd like to also thank the authors. Oh, sorry. I'd like to also thank my co-authors, Sheila, who will provide some remarks following this brief presentation. Marcela Jaramillo is here with me from E3G today. Just to emphasise that I think of the authors, we had strong regional representation, but also many of us coming from a practitioner perspective, having grappled with the issue of how to finance low carbon and resilient pathways. So in terms of what are we talking about here? Well, we're talking about mobilising investment, but really, as we've heard, it's about transforming our economies. That's about redirecting all flows of finance away from existing non-green options into those that are green. And so that really does require a very significant role for governments in particular. So this slide really highlights the three main areas that we focused and drilled down into in terms of what the role of governments may be. We recognise the critical role of finance ministries, not just being engaged, but actually taking a leadership role, given the challenges of this in terms of redirecting domestic resources, public resources, to mobilise and scale up private sector finance and investment. So we focused on three areas. As I said, I'll come into those in a little bit more detail. Broadly, the importance of an enabling policy framework, the underlying policy framework and economic and price signals within the economy, the importance of channeling public budgets into green options and investments, as well as also the potential for governments to provide more targeted financial support through use of financial instruments, which I will come into in a lot more detail. Broadly, these three areas are critical to providing the incentives and directing private sector investment into green investments. We also highlighted and or identified through the research the importance of an exit strategy. So governments need to ensure that they are being very transparent in how they're providing support, but also that support should over time be phased out as sectors, technologies become more mature, and the importance of governments recognising that really from the outset. In terms of our case studies, which I'll refer to in the following slides, we tried to have a very representative group, both in terms of regional coverage, sector coverage, maturity as well as the type of financing approach, which was, of course, key to this chapter. For the enabling environment section, we really focused down in what many of you will be aware of as long, loud and legal in terms of policy frameworks. A number of initiatives have picked up on that work. Please see Kirsty Hamilton here, who really pioneered that work. That has been picked up in other contexts. The UK Capital Markets Climate Initiative has also built on that to refer to investment grade policy. So in terms of what does that mean, that's really about creating the policy frameworks, but not stopping there, actually recognising that other price signals need to be adjusted in line with those policy signals. And I think we see in many countries that's not actually the case. But looking at the examples, for example, in the case of Costa Rica, it was important to align the incentives and price signals for the agriculture and the forestry sectors alongside their ecosystem services payment scheme that was introduced. I think Sheila will refer to the case of Morocco and the Mazen, which the government there recognised the importance of reforming fossil fuel subsidies as part of this long, loud and legal enabling environment. Also, we identified the usefulness, the value of governments to take an active approach to help develop programmes, a pipeline of projects that can be investable. Now, of course, the policy framework context is critical, but actually trying to get these projects moving forward and demonstrating the viability and feasibility, there's an important role for government to do that so that the private sector can see and learn from those investments and come in on the back of those. And I think underpinning all of these issues, and probably all of the issues across the report, the importance of a very well-managed dialogue with stakeholders throughout the process, and in particular the private sector. The second area highlighted is the use of public funds. Now, we see governments across the world are doing this in different ways. In the case of Korea, they have their 2% rule where they allocate 2% of the GDP into green growth objectives. In the case of Vietnam, they had a lot of support from the international donor community. The government there had created a platform for integrating those international resources coming in with domestic resources, and using that platform as a really useful opportunity for building dialogue between stakeholders, both domestically but also internationally, around the objectives of green growth. Many governments are also looking at creating national green funds. South Africa has developed a fund in the last few years. That has attracted domestic budget from the government of South Africa that is already financing projects. That had created a good platform for, again, good dialogue around what are some of the challenges of moving investments into these green sectors. And I think here in the UK, the UK's Green Investment Bank has also achieved similar objectives and really created a much greater understanding around some of the challenges, but also the benefits of using public funding in a strategic and targeted way to mobilise the private sector. And that really links into the next point very nicely. This was really about how to use financial instruments, and in particular going beyond pure lending instruments, more innovative use of instruments, financial instruments, concessional finance that is widely available at the international level. And I think some of the key findings we found here reflect the other findings, in that in using these resources, they have to be used in a very, they first of all have to be very integrated to the policy context. They need to be delivering on particular barriers that the policy mechanism is not delivering on. So they're going beyond the policy mechanism. Secondly is the targeted use of these instruments, so that the level of concessionality is very tailored to the actual risks and barriers that are seen, and that they're also used in a very transparent way. Both of these are really important for avoiding potential for market distortion, so creating a situation where the public resource is actually crowding out the private sector, so the opposite of what needs to be achieved. And as I referred to earlier, the importance of an exit strategy in that respect. I think in terms of the case studies, I thought the Bangladesh infrastructure development company that was created was a really good example of where the government there created a kind of public-private partnership that integrated international resources coming in, public domestic resources, and then blended that with private finance. But also critically, that PPP became a centre of expertise and developed an experience not just around the technology risks and barriers, but what is the policy context within Bangladesh? What particular barriers and risks is trying to be overcome through the use of that public finance? So getting back to this very targeted use. And I think this really underlines the importance of having domestic players, whether it's financial intermediaries, national development banks, local intermediaries, really playing an important role, because they can bridge that policy finance barrier, which is often a major prevention of finance flowing. Finally, and we didn't go into a lot of detailed discussion on this, but we saw this as a really important emerging issue, the importance of recognising the financing context. It's not, as moving to a green economy, it's about not just short-term financing actions, but looking at the long-term approach and the importance for mobilising long-term finance. So the trillions of capital that sits within the institutional investor community. And we see actually some interesting innovations coming out. I was particularly interested and having looked actually in some detail at what is happening in China, the Chinese government for their has now quite an ambitious green policy agenda, and they are very much using green regulations. The China Banking Regulatory Commission has created a green credit policy, and they are working with banks, domestic banks, to increase finance for green investments. And that is evolving over time, and they're starting to look at regulatory changes that will increasingly over time enable finance to deliver and meet these green investments. So in terms of, I won't go into a lot more detail, probably running out of time, but I would like to just emphasize that what was really interesting is that there is innovation happening from a whole range of countries. For example, the China Green Credit Policy demonstrates the innovation is coming from many different country contexts. And that, I think, underscores the value of a study like this that allows the lessons and peer-to-peer understanding around what is working in practice.
Amal Lee, thank you very much. Thank you for your energy and enthusiasm which you've thrown into this project together with the others. Sheila, do you want to just add a little bit of to that?